Oh hey, I didn't see you guys there. Well, as you know, this week has been my biggest wet week. And that's it, I'm done. I keep repeating mistakes. I'm not learning from them. My account is barely growing. I've only been trading for about a year and a quarter and I'm not a millionaire. I'm seeing nothing, guys. I just can't, you know? And this is gonna be my last video. I'm shutting down my YouTube. I'm sorry that I wasted all of your time. Hopefully, you can watch another successful trader that's just starting out in his journey, like I was. But I can't. I'm just done. So I'll just stick to my job. And I don't know what I'm gonna do anymore, but I know it's not this. So see you guys later. Y'all thought. Welcome back to the channel, guys. My name is Chuck Butler, and you are tuning into another wonderful, glorious Friday recap with your host, me. I'm sorry that I've been ghosted for about like a week and a half or so. It's just that because of the holidays, my job got extremely hectic. I mean extremely like hectic. Like I'm talking about long hours. I was too tired to post, too tired to do any of my other extracurricular activities. You know what? That's over. I'm back. We gonna get this. And no, I'm not quitting trading. Oh, boo-hoo, down 9%. I did it. It's not like I blew up my account. Like guys, come on. You act like I can't recover. I mean, look at this shirt. Come on, come on. You already know me. You know what? Let's go ahead and get into the video. I miss you guys. I miss this. So let's go ahead and keep it consistent. I hope you guys have had a very profitable week while I was gone, because I sure as hell did not. So let's go ahead and get into the video.
Baby, I want you.
Alright, so let's go ahead and get into it. So let's go ahead and look at the tickers I traded this week, which were 4. All of them were losses. Sad face. But we will recover. I will recover, like I always do. And let me go ahead and explain to you what I did wrong, or what I could have done better. So let's go ahead and look at the first ticker symbol, SQQQ. These two white bubbles are where I bought and sold. The reason I bought SQQQ at the price I did, which was $12.89, I was looking at its inverse, TQQQ. Hold on, let me go ahead and pull it up. Boom, bam. TQQ is the inverse of SQQ. I went ahead and traded this on Monday right here. As you can see, it started to show signs of a downward trend right out the gate. And as soon as it made a green candle and decided to trend back down, that's when I decided to get in, because that's when I thought that it was breaking pattern, obviously. So let's go ahead and move over to SQQQ. So I decided to get in at $12.89. with the intention to sell at $13.20 for about a decent 3% profit. But as soon as it crossed above 13, it hit resistance at around $13.02, and that wasn't enough margin that I wanted for the trade. So I decided to hold on to it, and it continued to trend down, and it stopped at around $12.85, and then hit a resistance at $12.90, and then pulled back, making 2 consecutive candles down. This is when I decided to get out around $12.73. What I could have done better on this trade is I should have recognized what was happening in front of me, and I should have waited to trade a bit longer until I could see a certain pattern or a certain set of candles that I knew that I could use to my advantage to make the trade better. And this right here, this zone right here, this little bubble zone where I sold, this was it, because this right here, this is a hammerstone doji, which is a sign for a bullish reversal. But I forgot that over time. I completely went over it, and look at that, it continued to trend right back up. And then if I would have got in at the candle above that and sold at 1302, that would have been a nice 2.33% profit. And let's see, let's go ahead and back up. Yeah, see right here, the plan I have drawn out for it. I entered at 1289 and I exited at 1273, losing a total margin of 1.24%. And what I could have realized on this trade that I now realize is that 1% is power, because I'm shooting for compounding interest, and usually I want 3 to 5% out of a day trade. But even getting 1% off of each day trade, that's still powerful, which I now understand, and that is now the goal that I'm going to try to shoot for, at least minimum 1% per day trade. Max 2%, because I'm on the PDT rule. So 2% a trade equals 6% a week, which is pretty powerful. But me being me, I wanted a bit more, but I am changing my percent goal down to 5%. Yeah, 5%. So I think that would be more achievable for me, and you guys get to see me doing that. So that's going to be it for that trade. Oh yeah, and the reason why I wanted to wait later, but I didn't, is because you see it formed a horizontal pattern, and I could have scalped this. Well, I could have only scalped it once because I only had one day trade available, but it had a support at 1285 and resistance at around 1305, which would have been a nice 1.55% profit. And for those of you that could scalp, this could have been an easy day for you. You could have scalped it, let's see, 1, 2, 3, about 3 times, which would equal up to 3% for the day. So that's not too bad. Let's go ahead and move over to the next ticker symbol Lowe's. Lowe's I called out last week. Here, let me go ahead. I called out 2 weeks before, and it had a beautiful uptrend. Obviously, I didn't get in onto it because, that's just me. It hit a resistance at around 97. It didn't quite hit the resistance around 98, and then it formed a support at around 94. So that was a good sign that showed that the uptrend was not over, that it was just on a pullback. So what I decided to do was get in on a small position, because this is a volatile market. I decided to get on a small position at around 94.80. My sell point was going to be around 98, but obviously that didn't go as planned, and I had a stop loss set at 94. But as you can see, I sold all the way down here. Next day up, I'll explain why. I'll explain why I would have cut it as soon as it broke 94. I would have cut it, but let me explain. Losing a total of 4.16% margin. Okay, let me explain. This whole week at my job, I'm working overtime for the holidays, and I decided to sleep in a bit longer, which was a complete mistake. As soon as I woke up, I saw this, and I'm like, oh my god, and I just sold immediately. So what I could have done better on this one is I should have not swung in this volatile market, especially on a pullback when the ticker was not uptrending, and obviously cutting my losses was a factor that made me lose the amount that I did. But I wasn't awake for that, and especially for this trade, what I could have done is, if I'm in a swing trade, I need to be up in order to see what's going on with it. That was completely my mistake. So, yep, that's gonna be it for that trade. Otherwise, I would have cut it exactly at 94. So let's go ahead and move over. Oh, this one was the big kick, the big kick in the groin this week. This one was the main one that hurt me so bad. I can't exactly remember why. I believe I was revenge trading from the loss on Lowe's and SQQQ, and I wasn't in the right mind because, okay, let's go ahead here. This is TST. Y'all know that on my previous video, I do play breakout, the whole and $half breakouts for stocks that are under $10 or highly volatile stocks. As you can see, I saw that it was hitting a resistance at around 223, and as soon as it broke that, I decided, okay, it broke the resistance, so new volume should come in. It did. For about a minute, it hit a resistance at 227. I'm like, okay, and I saw that it started to have trouble, so I decided to set my stop loss at 220, but I was not quick enough, and it just shot down all the way, and that just devastated me and the reason why I didn't exit there was because usually during a massive sell-off like this, it's big time buyers trying to get back in by knocking down the price. That wasn't the case here, and it just continued to make 2 more consecutive candles lower. So that's when I got out right here at, well, not right here, but at around $2. This one was a terrible trade. I should have never taken this position, not only at this level, but it wasn't even a part of one of my strategies. If I'm playing things like this, I would want it to break at least the 50-cent mark or the $2 mark. If anything, as soon as it sold off, I should have played it here at around 2 and sold it at around 220. That would have been the more optimal play, but I did not see this ticker and what it did at that time. I just picked it up on my scanner and I saw that, oh, okay, it's hitting resistance, and it looks like, oh, okay, it's about to hit over resistance. So usually what happens is more volume floods in and the ticker continues to trend up, but not always, and this was the not always case. So yeah, this was a terrible trade, but I should have cut my losses way sooner than that. But yeah, this one was a sting. I entered in at 225, exited at 2, and lost 11.1% on this trade. What I could have done better is used my stop loss more efficiently. It's there, so I need to use it. I should have stuck to my strategy. This wasn't even a part of my strategy, buying around this point. So yeah, that's gonna be it for this one. And then let's move over to the last one, ticker symbol DRIP. This one I did wait for. I saw that it was forming a wedge. It did have a resistance at 1150, and it was. And let me go ahead and draw a trend line for you guys. It's basically been trending up all day. Okay, so I decided to get in on the 50-cent break because those are usually powerful for stocks under $10, like I said again, or volatile stocks. And for DRIP, this was pretty volatile for DRIP today. So it was forming a wedge in a bullish wedge, which means the stock is going to continue to move in an upward direction, but there is a clear horizontal resistance, like this little triangle. Do you see right here? Let me see, like this. Let me boom, bam, like this, like just this big square right here. See how it's moving up. Well, this is ascending uptrend pattern, but it wedged into a pennant as soon as, or a bullish pennant as soon as it hit the resistance at 50. So I decided to hop in there, and it started to trend back down and make 3 consecutive candles down, and boom, this was the exact same candlestick pattern that was on SQQQ. Here, let me go back. The gravestone doji right here, except these were two longer candles. Usually it's 3, but it doesn't have to be 3 all the time. As you can see, it formed that doji, the hammer. Let me see. And let's go back on DRIP. Then boom, this one formed a let's see, I think it's called a gravestone doji. But let's see. Let me go ahead and no, yeah, it should be a gravestone doji, which is a bullish sign for reversal, and it started to trend back up. But I decided to get out at around here. I got out literally at the support that it bounced from before, and it continued to trend back up for the rest of the day. My plan was to enter at 11.50. To enter at 11.50 and sell at around $12, and it did exactly that. Instead, I exited at 11.23, losing a total margin of 2.61%. What I could have done better with this trade is wait for complete confirmation, which I have a big issue with that I need to solve. That's my main trouble right now with trading, just waiting for confirmation. I should have waited for a clear break and hold above the resistance points, because this was not valid. It didn't even make it 3 consecutive green candlesticks above, like this break did right here. As you can see, it broke it, pulled back, but it made a candle above and used it, and the next candle it used it as support. This would have been a more valid break to get into, but obviously I was being impatient and I didn't get into it. And I could have recognized that this was another reversal doji pattern, but I didn't have it in my mind at the time because I usually don't use or see those types of patterns. And see, look, another one right here. See, 1, 2, 3 doji, 1, 2, 3 doji, 1, 2, 3 doji. I suggest you guys learn this pattern. It's a pretty powerful pattern. And look, here's another gravestone doji. Look, 1, 2. It's not 3, but usually it's 3. 1, 2 reversal. So, yeah. So let's see. Wait for confirmation. Follow the trend. The trend was obviously up for the day. Even so, I could have just bought near the bottom of the trend line, which I didn't do. Which I could have done, but I didn't, because I was waiting to see the full pattern play out. And as you can see, it did play out. I could have held it all day and I would have been fine, but I was just waiting on confirmation, but that the pattern was true. But hold on, let me put in my charger. But I didn't wait long enough, or it's not that I didn't wait long enough, is that I was being too picky with the pattern, and I was only doing that because I already lost on lows, SQQ, and TST for the week, so my confidence was already shaky as is. So I was just being extra precautious, and I was extra precautious, but still, I still failed at the end due to my negligence of not understanding the patterns that were in front of me. So yeah, so that's gonna be it for this Friday recap. I'm sorry that some of you may be disappointed in me, as to I am myself, but I welcome failure. And I'm reading this trading psychology book. It's called what is it called? It's called Trading in the Zone by Mark Douglas. I suggest you guys read it too. I'll put the audiobook down in the link below. But yeah, that's gonna be it. And from now on, my percent goal will be 5% a week, and I will try to acquire 2% per day. 2% a trade is gonna be my max, and then 1% is gonna be my limit. So again, I'm sorry if I disappointed you guys, but don't worry, we got this, or I got this. But yeah, you guys got this too, and I hope you all had a beautiful weekend as well, better than me. And don't forget to comment down below if you found don't forget to like and subscribe only if you found value, or only if you found informative or valuable information in whatever I was saying during this Friday recap. Or you can comment down below and go ahead and hate on me a bit for being a failure. But I've only been trading for about a year and a half now, so I don't expect to be, a master guru or anything, but I'm still learning, and you guys are seeing me evolving through my journey, which is why, you've seen me lose so much, but I'm learning when I'm learning when I'm losing, and I'm here to offer my experience so you guys could relate to me, or you can learn from my mistakes. You may not can learn how to trade from me, but you can learn my mistakes to make sure that you don't make those mistakes too. So if I do say so myself, I do still offer some type of value. If you guys don't believe in me or you want to unsubscribe, you can dislike or unsubscribe if you want. I'm not going to get mad at you. Why would you watch somebody that's always, well, not always, but that's not a consecutive winner? And I'm trying to get up to that point. So I'm not giving up anytime soon. Please don't worry. I'm here to stay. The stock market, eventually, I'm going to become consistent and hit my goals. So I'll see you guys on this Stock Talk Sunday. Oh, and I'm also posting another Chatting with Chuck video tomorrow, so go ahead and tune in for that. And my crazy work schedule should be done now, so I should be posting. So I should be, back on the grind, posting at least 3 times a week. So yeah, I'll see you guys later.